Hey, this is Yussi. I run a small investment firm that specializes in REIT investing, and in today's video, I'm gonna share my asset allocation going into 2025. As you watch this, keep in mind that what makes sense for me may not make sense for you. We each have different objectives, risk tolerance, and other personal circumstances, but since so many of you keep asking me to share my asset allocation, here it is. Today, I'm almost exclusively invested in three things. I'm gonna start with the biggest one, which is real estate, representing about 50% of my portfolio. I invest very heavily in real estate because it's what I know best. I specialized in commercial real estate investing already during university, and I later worked in private equity real estate. Besides, I also think that real estate offers the single best risk-adjusted returns of any asset class. I love the idea of being able to buy a property primarily with the bank's money and then have your tenant reimburse the mortgage, all while your property keeps gaining value over time. So I've always invested very heavily in real estate. This is nothing new. However, over the past few years, I've not bought a single rental property. Rather, I've been pouring most of my money into publicly listed REITs. As I've often explained on this YouTube channel, REITs are today trading at decade-low valuations and offer significant upside potential, but there is more to it. And recently, I went on a podcast and I was asked why investors should consider investing in REITs today, and I'll put that segment in this video right now.
But why should people consider investing in REITs today?
Well, the main reason is that REITs are today priced at decade-low valuations. Their share prices have crashed even as the value of their real estate remained more or less stable, and as a result, there are a lot of individual REITs now that trade at 30, 40, or even 50% discount relative to the value of the real estate they own. What this essentially means is that you get to buy real estate via REITs today at a large discount, in some cases up to 50% discount relative to the net asset values, and I think that these lower valuations will result in higher returns over time. The last time REITs were so cheap was following the great financial crisis, and they then tripled in the following years. I don't think that REITs will triple now in the coming years, but I do think that we will enjoy significant upside. And by the way, that's why Blackstone, the biggest private equity company in the world, is today actively buying REITs. They bought about 30 billion worth of REITs over the last few years alone. Just recently, they announced yet another acquisition, buying a REIT for a few $1 billion. And I'm doing the same thing, basically, just on a smaller scale, and I'm sharing everything with my community at High Yield Landlord. We are the biggest online community of REIT investors with over 2,000 members on board, and this allows us to spend over $100,000 on research each year to find the best investment opportunities in the REIT sector, and we then share that with our community at a tiny fraction of the cost. What you need to know is that there are over 1,000 REITs worldwide, and not all of them are equally attractive. What we've done is that we've screened that down to what we view as the best 20 REITs to buy today, and you can access our portfolio with our 2-week free trial. You won't be charged anything for the first 14 days. You can cancel anytime, no questions asked. But if you see value in our research and decide to stick with us for the long run, you also get a special discount for signing up today. Click the link on the screen to get started.
Then my second biggest allocation is in small cap value stocks. Those represent about 40% of my portfolio. Just like in the case of REITs, I like to invest in what I know, and that prevents me from investing in 95% of stocks. My circle of competence is very limited, and I make sure to stick to it. And what this means is that I rarely invest in very big companies that are complex or in high-tech growth stories. Instead, I will typically invest in smaller and lesser known companies that are simple to understand, and those just happen to be small cap value stocks for the most part. Luckily for me, those are today historically cheap. Small caps trade at historically large discounts relative to large caps. I'll put a chart on the screen showing that. And value is also historically cheap relative to growth at the moment. But despite being so cheap right now, small cap value companies have actually historically generating far higher returns than large cap growth stocks. In fact, this has been the most rewarding segment of the entire financial market. But I don't buy just anything. I focus on simple things that I can understand, and given my private equity and real estate background, this means investing a lot in things like asset managers, gym operators, or even a co-working operator. To give you an example, Patra Investments is today my largest equity investor in alternative asset manager. It's known as the Blackstone of Latin America because the region's leader, it has an amazing track record and is growing at a rapid pace. But despite that, the company has completely missed out on the recent rally of alternative asset managers like KKR, Blue Owl, Carlyle, Blackstone, and so on. And as a result, it has become a lot cheaper, relatively speaking, especially for such a rapidly growing company. Another example of small cap value stock that I'm buying at the moment is called International Workplace Group, ticker symbol EWG. This is the biggest co-working operator in the world. Its next biggest rival, WeWork, is about 6 times smaller in size, but its financial struggles have hurt EWG's market sentiment, and as a result, today trades at just around 7 times its forward free cash flow. If this was a dying business, as the market seems to think, then I would agree that such a low valuation would be reasonable, but this is not the case whatsoever. Flexible office space is the future, and this sector is today growing very rapidly. Landlords are converting empty office buildings into co-working spaces and partnering with EWG to manage them in exchange of fees. As a result, the company is today growing the fastest in its history, and yet it's very cheap at the moment. Patria and EWG are two good examples of the type of companies in which I like to invest. They are simple businesses that are discounted, yet growing at a rapid pace. Hey, before I continue this video, can you please do me a huge favor and click the like button? That will help me a lot to keep on growing. Also, make sure to subscribe to the channel. I'm planning a few REITs interviews in the near term. Thank you very much in advance. Then my third and final allocation is cash, which today represents about 10% of my portfolio going into 2025. And that's not because the market is missing opportunities, but rather because I'm planning to buy a condo in 2025. After years living abroad, I want a pied-à-terre in my home country of Finland, and I'm planning to buy a condo in Helsinki. This is mostly intended for the personal use of my family rather than as a financial investment, but I do think that the timing is also attractive. Real estate prices have dropped some 10-20% in Helsinki over the past few years as a result of the surge in interest rates and significant new supply hitting the market. I have no clue where prices will land over the next few years in Helsinki, but with the continued internal migration towards a capital city, I think it's unlikely that prices will be any lower 10 years from now. Now, a final point I want to make, that another reason why I'm investing so heavily in REITs is because this allows me to align my interest with those of the members of High Yield Landlord. I have significant skin in the game, which means that when I win, they also win, and when they lose, I participate in the losses as well. I think that this philosophy of investing heavily in what I cover gives my audience some confidence knowing that I've done my research and I'm willing to put my capital on the line. Now, let me know in the comment section below how you're investing for 2025. What are your biggest asset allocations? Also, once more, if you want to access my full portfolio, you can join High Yield Landlord for a 2-week free trial. First link in the description of this video. And if you could please click the like button, that will help me a lot to keep on growing. Thanks so much in advance. See you at my next one. Bye-bye.